Assalamu alaikum and hello everyone. In this lecture, we will learn cost estimation and cost behavior. So, learning cost estimation and cost behavior is very much useful in business for many reasons. For accurate budgeting and forecasting, to setting up pricing strategies, profitability analysis, and of course, strategic decision making. It is also very much useful in cost control and efficiency because the awareness of cost driver and how costs fluctuate with change in production or level of activity helps companies to manage expenses better, reduce waste, and optimize resource allocation. It is also useful in break even analysis to identify the point where total revenue equals to total cost and guiding investment and production decision. So, in short, you can say that cost estimation and cost behavior insights enable businesses to operate more strategically, allocate resources more effectively or efficiently, and make informed financial and operational decisions. So, what is cost estimation? So, it is the process of predicting the amount of cost that involve in particular, um, you can say activity or product. So, this involves forecasting expenses, which is based on historical data and resource requirements like labor, material, and other factory expenses that impact cost. So, on the basis of historical data or cost estimation, we find out the relationship between the cost and the activity, which is called cost behavior. So, it refers to how costs change in response to various business activity levels. So, and then, on the basis of cost behavior, the company usually predict cost using knowledge of cost behavior to forecast level of cost at a particular activity. So, this, as the name suggests, cost prediction, the focus is on future cost basically. So, with the help of historical data, which is cost estimation, we judge the cost behavior or we find out the cost behavior, which is the relationship between cost with the level of activity. Level, what is the level of activity? Level of activity is the number of units or the number of hours in the factory. So, with the help of cost behavior, the company predict cost, which is useful in a strategic decision making. Behavior wise, we have three different costs: the variable cost and step variable cost, fixed cost, and the step fixed cost and mixed cost. So, all these three costs helps business to anticipate how expenses will change with shift in the production, or you can say the volume or the activity level. And this behavior basically enables the companies to plan more efficiently and more effectively. So first of all, we have variable cost. We have two type of variable cost: the total variable cost and the per unit variable cost. So the total variable cost is the cost that changes as level of activity changes. Here we have the example: the cost of the labor stitching shirts in a factory is based on how many shirts labor stitched. So you can see that as the number of shirts increases, the total cost of the labor also increases. Um, Whereas the case of variable per unit cost, variable per unit cost remains constant or same over a wide range of level of activity. The labor charges per shirt is constant. For example, the labor cost of stitching one shirt is $1. So as the number of shirts increases or decreases, but the cost per shirts remains same or constant. Then we have step variable cost, or this cost actually, step variable cost, you can say, it vary with production, but only a certain activity levels. They increases in steps, as the name suggests, step variable cost. So this is this cost increases in steps when a business reaches a certain level of production or activity, but remains constant with these range of activity. For example, here, from 1 unit to zero, from 1 unit to 100 units, from 101 units to 200 units, from 201 units to 300 units. So for a wide range of activity, this cost remains constant. For example, you can say the example of uh, mm, mm, any packaging supplies, or any supervisor salary for, you can say, for up to 10 workers, one supervisor is enough. But when production is increases and the workers are also increases, so from 11 to 20 workers, we need one more supervisor. So for a narrow range of activity, this cost remains constant. That is, from 0 to 1 work, 0 to 10 workers, this cost remains constant. And from 11 to 20 workers, this cost also remains constant within the narrow range of activity, and this cost increases stepwise. So that's why cost called step variable cost. So the total cost increases to a new higher cost for the next higher range of activity. Then again, we have the fixed cost. Fixed cost is total and variable, total and per unit fixed cost. So total fixed cost remains constant. The rent of the factory is an example, that whatever the number of shirts produced, the monthly rent of the factory remains constant. So monthly rent of factory does not change no matter how many shirts the company produce. Whereas in case of fixed cost per unit, the average cost per unit per shirt decreases as more shirts are produced. So this is very fixed cost per unit behavior. And then we have a step fixed cost. So step fixed cost, here you can see the example. The total cost does not change for a wide range of activity, and then jumps to a new or higher cost for the next higher range of activity. Here we have the example of rent of the factory. So if a factory is for you can say 100 workers can work in a factory, or they can produce 1,000 units. So factory rent is for from 0 to 1,000 square feet area. But if the workers or the production are increased from 100 workers to more workers, this means that you will have to hire or get more space. So from 1,000 to 2,000 square feet. So here, the total cost does not change for a wide range, that is from 0 to 1,000 unit, but after that it increases and so on. So in simple words, we can say that step fixed cost remains constant over a wider range of activity, but jumps to a higher fixed level when the you can say activity exceeds to a certain range. So here we have the example of warehouse rent, or you will have to hire another warehouse if for another number of units. For example, one warehouse is enough to store 20,000 units, and now you are producing 25,000 units, so you will have to get one more warehouse for next 20,000 units. So this is the concept behind step fixed cost. there's a difference between step fixed cost and step variable cost. Um, in case of step fixed cost, the range of activity is wider, whereas for variable step cost, the range of activity is narrow as compared to step fixed cost. So that's why step variable cost changes more quickly as compared to step fixed cost. So now we are going to practice one problem from Managerial Accounting book by Ronald Hilton. This problem is from chapter 6, which is about cost behavior. And this problem is 6-24. In this problem, we will learn uh, the impact of cost behavior on total cost and per unit cost of the production. So here the company shows you the company is about broadcasting, and here the cost we have a production crew and supervisory employees. So these two types of cost is mentioned for the two different month: production crew cost, which is for July and September, and supervisory employee cost, which is for July and September. So the behavior is for production crew is variable. As we have discussed, that variable means the cost changes with the level of activity changes. So you can see there is a difference in the cost, whereas supervisory employee salary is fixed. That's why irrespective of number of units produced or sold, the cost is constant. Here the number of units means as they are service providers, so they have broadcast hours during the month. So broadcast hours are also given. Now the requirement is to compute the cost per broadcast hour during July and September of each of these cost items. So here we have the first requirement. First requirement is to calculate cost per broadcast hour. We have two different month. One is July and other one is September. And then we have two type of cost. One is production crew cost. So here you can see the cost for the month of July is given, and the number of hours related to July is given. And for September, and the hours for September is also given. So here how we calculate the per unit cost, we have, you see the total cost is dollar 4875 4875 per hour, means we are going to divide it by 390 hours. So in the case of September, we have $8,000 cost. So dollar 8,000, and this is going to be divided by total hours are 640 hours. So how we calculate these costs? So in both cases, you can see in the both month. However, the number of units are increasing from July to September. You can see the per unit cost or the variable per unit cost remains constant. We have just learned in this lecture that total variable cost changes. As you can see, 4,875 to 8,000, but per unit variable cost remains constant. Whereas in case of so this is the variable cost. I'm going to highlight it. Then we have supervisory salary. Supervisory employees cost, and total fixed cost remains constant, whereas per unit fixed costs decline or reduces as the number of units increases. So let's see that whether what we have discussed in the slides are true or not. So you can see that the total cost is 5,000 divided by number of hours. So number of broadcast hours are 390. Whereas in September, the cost is fixed, which is 5,000, whereas the numbers are 640. The hours are 640. So here we are going to calculate per unit. Yeah, here we have cost per unit. Here cost per unit. So the supervisory employee cost is 12.82, whereas in September it is 7.81. And you can see the difference because of the as the number of units increased, the cost per unit decrease. So this is the basic definition of fixed cost, that total fixed cost remains constant. Here you can see 5,000 and 5,000, whereas per unit fixed cost decreases as the number of units increases. So second requirement is what will be the total amount incurred for each of these costs during December when the station's activity will be 420 broadcast hours. So now we are going to perform cost prediction function. So we are going to predict cost. In the second example, in the second requirement, we are going to calculate total cost. So total cost. We have two type of cost. One is production crew cost. The other is supervisory implies. So production cost is $12.5 per unit. So $12.5 should be multiplied by how many hours? 420 hours. So 420 hours. So here we have 12.5 multiplied by 420. So 5,250 is the production crew cost if the broadcast hours are 420. Whereas supervisory implies, as the name suggests, this cost is fixed cost. So this cost remains constant, which is fixed cost, which is 5,000. So here, this is your total cost, which is 10,250. The next requirement, the third requirement is what will be the cost per broadcast hour. So per broadcast hour, if 420 hours, so we can calculate it here in requirement number 3. So total cost is 5,250 divided by how many hours are there? 420. So this is 12.5. As we have discussed the cost behavior, so total variable cost changes, whereas per unit variable cost remains same. Whereas in case of supervisory employees, total salary is 5,000, whereas hours are 420. So we can add both of them, or we can calculate it in this way, that 10,250 is divided by 420 hours. So the answer is same. So this is one of the exercise from Ronald Hilton book Managerial Accounting that shows the cost behavior. How cost behave means how cost behave with respect to the change in level of activity. So you can see that the total variable cost changes, whereas per unit variable cost remains constant. And as far as fixed cost is concerned, total fixed cost remains constant, whereas per unit fixed cost declines or reduces as the number of units increases. So that's it from this lecture. Take care, class.